Yo, what's up? What's up? What's up? Welcome back to another Michael Crowe training. I appreciate you guys all tapping in with me tonight. Um, Give me 1 second. So if you guys got questions, type them in the chat. Raise your hand. I'll try to get to you. I appreciate everybody who sent tickers that they wanted me to look at tonight with tonight's training. BBAI or soon. Yeah, I got you, Rodney. I'll look at those. All right. So tonight, y'all, I just wanted to I wanted to talk about just setting up your week. I know we've had a lot of new members join, and whether you've been in the Wealth Squad for a long time or you're new to the community, I hope when you come to these trainings, you come into the trainings with a fresh set of eyes and just enable yourself to learn something every time. That's what all of these trainings are really all about. Even myself as a provider, I'm still learning too as I go along. I'm sure that Ray and Kia and Chris probably still feel the same way about that also, as they go on. If you feel like you're not learning anything, then I think you really need to go back to the basics of things. I think that's where you reinvigorate those muscles essentially. So anyhow, I appreciate you guys tapping in with me tonight. All right. So Z, BBAI, and soon some other people wanted me to look at FRC and we and CVS. So I'll talk about those two also. So really tonight for me was also just to give you guys another chance of just seeing my process of how I look at things and what my thought process is. Let's see, hide this. Everybody who knows me knows that I live on FinViz. Like this is just my screener. There's a ton of them out there that you can use, but this is where I specifically choose to use them. That's all that really is, but you can use them anywhere. So I'm actually glad that I'm giving my training on a Monday. Most of my trainings have always been towards the end of the week, like on a Thursday or something, Thursday, Friday, Wednesday, occasionally. But I like that I'm giving it on Monday this week, because I think a lot of the times when you're building your watch list, you're looking at the week ahead. But what you also need to look at too is what happened last week and the things that were starting to move last week and how that's going to continue over the weekend going into Monday, right? Yes, it's Monday night this day and the market's already over. But I personally think, and it's just a testament to today, that Mondays are some of the worst days to trade in the market because it's choppy. People are taking their profits from the weekend. People are just trying to get back into the swing of things. And I talked about this in my last training too. So a lot of the times on Mondays, I just sit on the sidelines. I don't do a whole lot on Mondays. Occasionally, I'm just trying to catch up on market news, see what else might come out through the woodwork, all of those things. But for the most part, I like to sit on the sidelines on Monday, and then I like to jump back in on, say, Tuesday or Wednesday, and then trade again on Thursday or Friday, which are two of the best days to trade in the market. So, and I think that goes with saying, and I mentioned this in the squad today, that don't feel like you need to trade just to trade, whether you're trading options, whether you're trading shares, whatever it is. Investing is a different story because you're just putting your money in the market and you're letting it do what it does. It's just sitting there. But something as temporary as options, don't feel like you need to trade every single day, because usually the people that trade every single day, and they don't take the breaks and they don't take a chance to just sit on the sidelines and watch and observe, are usually the people that blow up their portfolios. So don't ever feel like you need to rush those trades. All it's going to take for you to make in a week is one quality trade. In the same amount that you might take 4 or 5 or 6 trades, you can generally make what you need to make in one solid trade, right? Very focus on very few tickers, master those, then move on to some other ones. And then that's just all along the lines of just understanding the personalities of the market and how those personality profiles move in accordance with like SPY and some of the other tickers, right? But anyhow, coming here to FinViz, I use the screeners. I'm looking at the groups tab to see what things are running. What are the things that have ran in the last week, right? So I don't really pay attention to the weekly very much. When I'm looking at swing trades to get into, I'm more concerned with looking at like say the 3-month or the 6-month performance. But when it comes from the weekend and I'm going to the start of the week, I'm going to look at what was running in the last week. And now it's not been a secret. Like energy is always thriving all the time. All of the banks were getting crushed. We talked about this last time in one of my last trainings, was that the banks they got crushed because of, the obvious reasons, but it's also, I think, a great opportunity for you to catch them at the right moment on their way back up. It's going to recover. The market, no matter how bad it gets, the market always recovers. You look at everything in the history of time since the market has been in inception, right? It's always recovered from every single thing, the housing crisis, all that stuff, the market crash. It's still recovered, whether it was 5 years later, 2 years later, doesn't matter. It's still always recovered, right? It's going to reset itself. So it's good to catch all of these things when they're getting smashed and catch them on the ride back up, right? So I'm looking at this, and then from here is where I would take things over. So from energy to basic materials, consumer cyclical. And again, I talked about each one of these in a previous training. You can tap into those in, I believe all of those trainings are pinned in the research admin channel, in chronological order of when I did them, from the most present to the ones that go back a couple of years when I first started in the squad. But I'm looking at these sectors and then coming back over to the screener and singling them out just like that. Like so coming back here to this groups tab, I don't necessarily start here at the top though. I'm going to come down, just say 3 to 5 of where these are, and I'm going to work from the bottom up, because I don't necessarily want to catch something that's already thriving, like energy, right? I'm trying to find the things that are turning around and starting to make its way back up, right? So I'm looking at this 1 week relative, and then also kind of using it hand in hand with the 1 day, and looking at towards the bottom of this chart and working from the bottom of this chart all the way to the top. As you see that consumer cyclical was at the bottom of the 1 day, but then on the 1 week, it's third, right? And similar with real estate, similar with utility. Well, not so much with utilities, right? Because utilities are down here all the way at the bottom on the week, but that's also an opportunity too. So I'm going to use these two hand in hand and come to the screeners, and you can use the screeners on stock charts too if you want to do that, right? But just looking at we'll say the consumer cyclical trades, and then it's really all about you putting in the parameters that make sense to you. If you don't have a big budget to invest in options or to swing trade the stocks, maybe you only have $200, maybe you only have $50. I don't really know. But whatever that is, if whatever your budget is, you can set that custom parameter for yourself. and filter out all of the other junk, right? So let's just say you only have $200 max that you can invest, right? And let's just say you want to get rid of the penny stocks too. So let's just say we're gonna look at everything from $5 to $200, right? So we went from 551 opportunities, and now it's going to single this down to 386. And your whole job is, it's great to have all of these, but what you really want to do is you want to single this down to say 10 or 15, and then pick and choose from there and single that down to maybe 5 or 6 at the most, right? And if you're trying to catch something on the downswing, then maybe that's where, or that it's sort of consolidating, then maybe you're looking at the oversold territory. Or again, you're customizing this for yourself, right? So maybe you're taking it between 30 and let's say 45, right? So that goes from 380 opportunities now to now 79. So now we're getting somewhere, right? And you want to be able to trade these with options. Or if you want to do it two different ways, right? You want to be able to trade options on it, and you want to be able to short it if you're trading stocks, right? So do it both ways. And then if you want to look at a certain amount of volume, right? Looking at the relative volume. The relative volume for me is important, because what this is, and if you're ever confused, if you're using FinViz, you can click on this and it's going to tell you exactly what to do, like what all of these mean. You just hover over it and it tells you exactly what all of these mean. So you don't have to search everywhere for the answer. But the relative volume is important to me, because if you put it over, say, 1.5 or 2, that's basically saying that the stock itself is trading 1.5 times over its normal volume. If its normal volume is, say, 200,000, right, and it's trading over 1.5 times, then it's trading at almost 300, over 300,000 in volume, right? And usually the ones that are trading 1.5 times over are the ones that have really great volatility, contracts move, and also the share price, if you're trading just the shares themselves, right? So we've got 67 and looking at 1.5. So now we're down to 6. And then it's a matter, we sorted that by volume, of looking at these charts, right? So pinpoint it based on parameters that you're looking for, whatever they are. You can pick and choose certain things. I think using the analyst recommendation, the buy or better, or the strong buys are important too. And then you can also, another one that I would also say, sometimes having the inside ownership is important, because that's going to influence, I guess, the credibility of what it is you're trying to get into also. So those are other parameters that I'm looking for as well, right? But with these, the only part about FinViz that I wish was different is that I actually wish there was a MACD crossover for FinViz, but there's not. I've actually looked at like trying to write a script for it to go into FinViz. I've reached out to a couple of my friends who are like coders, and they do like HTML stuff, like development stuff on the back end, and I have no idea. But I've tried to adjust certain things to sort of match where those are, to be able to catch those bullish MACD crossovers too, that are similar over here to stock charts. So for stock charts, you can use this one, the predefined scans. Chris has talked about this plenty of times. Crystal has. I've talked about it several times also, but you come to the predefined scans. Chris and Crystal use the bullish MACD crossovers. Another one that I really like to use I'm all about trading the gaps, right? I did a training on this, and you can make a lot of money trading the gap ups, and the breakaways and the runaways. You can make a lot of money doing these if you catch it at the right time. A lot of the times when you get them on the screeners, they're kind of in the later stages. So every once in a while, you can catch one that's just sort of forming. And with that, coming over to the FinViz part, when I'm looking for these gap up stocks, I'm looking for something that's run between 3 to 5%. Anytime around that 3 to 5% is sometimes catching it early. And then you have a little bit of room to be able to run it up to a decent price target. And I mentioned this today too. It doesn't matter if your option contracts, mainly in options, not so much in the shares. When you're trading shares, you really want to hit your price targets. But in options, because it's temporary, it doesn't really matter if it hits your profit target, right? Because that's not what you're trading when you're trading options. You're trading the premiums, you're trading the cost of the contracts, you're trading the percentages. You're not necessarily trading the share price. It doesn't need to hit your price target, right? It only needs to move towards your profit target for it to be successful. It could be a 3-cent move and your contracts could run up 35%. So it doesn't really matter if your contracts hit whatever profit target is in the share price. Those are just guides, right? For telling you when to exit your trade, how to manage your risk. But for me, I'm scaling out of my options trades every 30 to 35% every time, depending on what it is. Now, there are times when I take, say, 10% or 15%, but it's all based on volatility and how it's moving, right? And you just have to make that decision for yourself. Kia, myself, Ray, Chris, Crystal, we're never going to make those decisions for you. You have to decide for yourself how you want to trade whatever it is you're trading. But we're always at least going to try to lead you to the money and give you a good understanding of what we see and the timeline that we see it all taking place or coming to fruition. And then from there, you have to really kind of take the reins of your own trade at that point. And I would strongly recommend that you be careful swing trading a lot of things with the market the way that it is, because it's inconsistent. Some of the other industries that are thriving, say the banks that are starting to thrive again, and the energy that's starting to thrive again, those are a little more safer. But things like technology, the consumer cyclical trades, they're just inconsistent. So you swing trading those on the option side of things, you run the risk of those contracts getting smashed the next day. But it makes sense to trade them if, say, your delta on those options contracts are significantly different than where the theta is, because then it becomes a high reward, low risk trade. Let's just say your delta is at 0.45 and your theta is at negative 0.002. That's a low risk trade to me. So for me to swing trade that, you're not going to lose that much money if your contracts get smashed anyways, right? So it's just personal decisions that you have to sort out for yourself. But at least give yourself, you want to make an educated decision based on whatever it's showing in the charts themselves, right? So hopefully that all makes sense. Let me see. Let me go back through here real quick. I'll look at SPY. I'll look at SPY here in a minute. And Z, I think somebody said Z also. Yeah, Lauren said Z. So I'll look at SPY and Z. And Kusan, I'll look at Hasbro also. A couple that I actually wanted to point out, Roblox. So that's Boomer Gresham's favorite stock. Everybody's favorite stock, Roblox, Tesla, Netflix. Okay. One of the ones that I actually wanted to say, just talking about the week, right? So this is how you really want to map these out for the week using the Finviz screener, of not necessarily spending a whole lot of time on them, but when I'm looking at the trades here on FinViz, I'm looking for that small short green uptick, right? When I would say like catching something 3 to 5%, like this SUP. I don't know what this is. Superior Industries International. It's auto parts. So for me, look, it's up 5.6%, 28 cents. It's started. The MACD's all starting to curl. It's pretty low on the RSI. It has room to move. You can see where it peaks is right around $6. Now, this might not seem like a lot, but in the options world, this is a lot. In a 70-cent move in options could mean hundreds of dollars. So it just all depends on the volatility. Now that because it's auto parts, at least from what I know about that, auto part stocks don't move very quickly, right? They're like energy. So right out of the gate, you just have to come with it that you have to have patience if this is something that you get into right out of the gate, even before you look at the options contracts, even before, like, auto parts don't move that fast. So you have to be willing to sit on your hands for a minute and watch paint dry, because it's probably not going to move very much. But the thing is with these slower moving stocks, when they actually move, they move. So that's the plus side of that. You just have to have the patience to be able to do it, right? And same thing with Hoft, right? Hoft is, it looks like it's curling also. It's got that little green uptick. It's about to break this little barrier here. And you see where this resistance is for this time is right around 20. So you have about $1, almost $2. Well, really $1 and some change movement here for this, if this is what you choose to get into, right? So what I'm doing with this is that I'm just making a list for myself right off of the bat while I'm scanning. And then when I reach a point where I'm like, okay, I'm done scanning, I've scanned for an hour, these are all of the stocks that I've come up with. Now what I'm going to do is I'm going to take all of these that I've looked at, or that I've seen on the charts that caught my eye. Now I'm going to go back and I'm going to go look at all of their charts, all of their setups, all of its room to move, all of the price targets of where it could go. And then, obviously looking at the options chains. Now, after I make my list, I do look at the options chains are one of the first things that I look at, because if I'm trading options, if I'm looking at a ticker, I'm looking at the chart setup, I'm looking at all of these other things, but I do the options chain last, I'm wasting my time, right? I want to be able to get it out of the way. I want to look and see, is this stock even worth trading? Does the options chain suck? Like, what does it look like, right? So a lot of the times I juggle between just like, I don't really trade from Robinhood very much. I do occasionally, but I mainly look at it to use for the options chain. And if you trade on Robinhood as opposed to like Webull or a larger brokerage, it's not necessarily a bad thing either, because Robinhood actually gets a better fill on the options contracts than, say, Webull will, or some of the other brokerages. That's actually the plus side of what I do like about Robinhood. But the downside is that it glitches all the time. And it gets frustrating, especially when you're trying to get in or get out of trades. But your fills are generally better on Robinhood than they are the other platforms. So, but that's because they pay for that to happen. It's a third party app, so they end up paying the market makers essentially to be able to have those fills, right? They get it, buy it from the brokerages and all that stuff. I don't know how it necessarily works on the back end, but that's the plus side of that. But generally, when I trade from Robinhood or Webull, I make what I make from there, and then I take those profits and I put them into my primary brokerage, which is Charles Schwab. Now, the difference with using a larger brokerage as opposed to a Webull or a Robinhood is that with a lot of options, it's regulated that you can only sell in increments of 5. But when you get to the larger brokerage, for whatever reason, I have no idea, but there's been plenty of times when I've tried to sell options that were in increments of 5 on Webull or Robinhood, but when I go to sell them in my larger brokerage, they sell it like, 63 or 64. It's not in increments of 5. So that's the plus side of having a larger brokerage. There's more access. I I think there's a lot more benefits to trading from a larger brokerage than it is for, one of the third party applications. And again, that's just a personal decision that you have to make for yourself. I trade from wherever I have buying power. I have buying power in all of them, and I just trade where my money is. That's it. And then I make little adjustments from there. But anyhow, that being said, I make that list. I look at the options chain. If it's worthy to trade, then I'll start to go and look at the setup, the time frame of when it could hit its targets, what those could all be, right? So just one of the places that you can go and look at that, I've shared this before, is optionistics. You can always look at the options chain here. You need a subscription for it to look at the real-time data, but you can still actually look at options data without it. Devrel says is the same process used for the Getty trade today. Yeah, this was the same process for Getty too. I saw that Getty was starting to run, and there was a little bit of room to move. And another thing was nobody in the squad was talking about it. It wasn't on anything. And so those are opportunities that I actually like getting into. Devin asks which sectors move the fastest. You look at like Apple, the technology, things like that. Like the tech sector is always going to be super volatile, all of it. So for this, let's go over and look at CVS. I was just plotting to see where these trend lines would be, right? Zoom out of this. All right, so for CVS, I think this is actually a pretty good opportunity. So CVS had a nice little run up not too long ago, right? Basically on Wednesday, the 22nd. Then it had a little bit of action, started to bounce back on Friday. But where it's at right now, already out of the gate, I'm looking at this. I'm looking at this big red candle because, like I said before in these other trainings, like the gaps get filled, right? So if you aimed for this on the high side, you've got 80.13. On the low side of CVS, you've got 77, right? You can basically take your profits at either one of those. But then going back, I want to go back in time to see where within that range I make those levels, right? Because you can see of where this breaks out of this consolidation is literally right at 77, right? And that's from the time frame from May, right? And you can see where the 80.13 was before of where this sits down here on the bottom, but then you still have a little bit of a gap right here. And in between this, where this changes sentiments. So for me, in this scenario, I might actually, I'll keep this here as just a reminder, but then I also might make a secondary target, say right here or right here where the base of this one starts. This is also something that I would most likely aim for too, right? Because you're looking for 3 or 4 candles that this runs through. And I'm just going to change the color on CVS, on this CVS one, just so it's easier to notice, right? So I'll make this yellow as sort of a secondary, right? So if I'm trading this, I'm going to, you can most likely enter earlier than 77, but I think at 77 is where the sentiment becomes bullish to where it runs. But if you come back here to where it's at present day, zoom out of this. Now what you could do is basically where it's at is really a good entry. Like I think if you're doing an early entry here, you take the early entry at 76.52 as opposed to 77. But you just have to be okay with it's not a concrete confirmation, but it's a chance for you to actually jump into it early because it's breaking the highs of all of literally 5 other days, right? And that's what you're going for, higher highs and higher lows. And once it breaks through that, the sentiment shifts. So this generally you could break you could enter earlier at 76.52 on CVS. Now, looking at the options chain, so I have CVS pulled up here, right? Because the market is so inconsistent, I'm looking at generally 2.5 to maybe 3 weeks out, sometimes a month, but generally not, because I'm not trying to buy expensive contracts. I would much rather trade the contracts that I can get under, say, $1, under $100. So in this scenario, you see that the April 6th calls have the most volume. Now for this, in an inconsistent market, I don't necessarily recommend playing the weeklies. There's just too many variables outside of your control, and playing the weeklies, it's just a good way to lose your portfolio. So at minimum, I'm probably looking here at the 414, and you can see that there's the 75 is obviously already in the money. But beyond that, and the contracts aren't that cheap either. They're basically $200 a contract. So looking ahead out here to the 21st is where I would probably end up being. And what I'm generally looking for, as I've mentioned in some of the previous trainings, that I'm looking for these to be, for the volume or the open interest to be at least 2 to 3 times each other, right? So if this is at 627 for the $75 contracts for April 21st, you see that this is basically 3.5 times. The open interest is 3.5 times the volume. And also the same with the $76 call, right? Your volume is more important than the open interest, right? Your open interest is the number of contracts that haven't been closed from the previous day, and the volume is the number of transactions that have been bought, been sold, the number of times that it's changed hands. So I'm really looking for the volume to be much greater than the open interest. But in this scenario, if the open interest is at least 3.5 times, 3 to 4 times what the volume is, then it's an opportunity that I think is worth considering. So in this scenario, if I'm looking at a trade on CVS, I'm looking at probably the $76 call for April 21st. If I get into it, if I want to take a little bit more risk and not trade with a lot, then I might actually look at the 77, right? Where this one's 1840 in volume, 693, contracts are $30. And you can't see the Greeks on this one. I put it to show the Greeks, but I don't know why it doesn't. I think it just doesn't show it because it's side by side. But those would be the trades that I get into with CVS. And then on the other side of that, if you're looking to play CVS to the downside in the event that it falls further, for me, looking at the chain itself, I'm looking at probably a week out. I'm not necessarily going to play the weeklies on the puts themselves, right? But if you look at these from 76 on, I'm looking at roughly the $77 put for April 14th. The 21st doesn't really have anything. So the April 14th is plenty of time for this to play out. And the 77 is where I would hedge those calls if I got into that trade. So those would be my levels for CVS. And you could see that the ATR for CVS is right around $2. Now the thing with stock charts is putting these on your charts. You can put the ATR there to where you don't have to manually come down and look at it to try to match it, but it's right around $2 for CVS. So looking at targets of where this is at 76.09, you're just adding $2 to that, right? Or $1.98 or whatever it is. It scrolls in the way, so it's here, right? So $1.54. You add $1.54 to 76.09, and that essentially is your first price target of like when you should take majority profit, because once it hits that, it's either going to break above it or it's going to get rejected. And most of the time it gets rejected first. So that's how I'm making that adjustment. With all of it, I'm always measuring it based on the average price movement itself. All right, let's look at, somebody said to look at BBAI. Hasbro, Roblox, Uber, Getty, Plug. Dre says, do you think Getty will have more volume tomorrow? I think it's possible. Like, so if you catch those trades early and they have a lot of volume today, the rest of the internet catches on too. And they'll go and start to get into these trades. So it's possible, but the market's pretty unpredictable. So if you got into the Getty trade today, you should have been able to take at least 50% from that trade, which was higher than what I took. Yeah, what the D and the E on the chart is dividends and earnings. Christian says, do you use a different time frame as confirmation to enter a trade, or do you wait for the stock to hit your entry price target and then just enter it regardless of the time frame? I'm always setting my time frame confirmations of what my levels are. I'm usually always setting them on the day chart first, and then depending on how I want to trade it, I might adjust those entry points from, say, a 30-minute chart or an hour chart, but I'm always putting those confirmations first and foremost on the day charts. Right. Robert says, why would you go for a $75 call for CVS if it was currently at 76? Is it just in case price movement drops? You would choose a $75 call because look, right? So a $75 call is you basically taking less risk. It's already above 75, right? But not necessarily, because what you have to do in terms of what they call break even. So if you choose a $75 call, but you've paid $1.36 for your options contract for that call, your break even becomes 76.36. So it's not exactly there yet. You have to add in whatever the cost of your contract was to that strike price for it to be a break even per se. But the closer to the share price you get, the safer your options are. So it's just a matter of your risk tolerance. If you wanted to take less risk, and you're not going to earn as much money, it'll have less value to it, right? Than it would be for you to choose a $77 call. The 77 is going to have a higher reward than what the 75 is, because it's already there. Yeah, so looking at BBAI, let's look at look over here at this options chain. All right. So looking at BBAI, now it's obviously starting, it's already crossed. It's already sort of at the top. Now, when I'm looking at the MACD also, I'm looking at where these peaks are. So it looks like it could still move a little bit, right? It's sitting at 35. It crossed last time at 64. So you have a little bit of room to where you can move, right? But going back in time for the MACD itself, it's sitting here at 06. And then what it's going to do is when it gets here to 29, you're probably going to have some resistance there too, right? So what I would do in this scenario And I'm just matching this. I can't really make the mark because yes, I can. Let me see here. So I'm going to move this up to where this consolidated last time, right? So you really don't have a whole lot of room to move here for the MACD before it starts to maybe consolidate again sideways. What it's done before, it's generally going to do again if you go back in time and you're looking at it, right? You can start to see you can start to see where it repeated itself in certain ways, right? Of what it broke through and what it didn't. So you see that it broke through here twice, right? But you see how long it just sort of held this level here underneath it. So I would also map out my trades based on this sometimes too. It doesn't really give you a whole lot of room to move. So for this, even though you have the step up there of those two candles, I would also probably in this scenario, excuse me, look at playing it to the downside too. Right? Because you see here of how far this pushed up to 380, but then also how far this ended up getting pushed back down, right? Almost 60 cents. So really, I think ideally your move of where this goes is like maybe 324 before this starts to hit resistance again, because you basically got 6, 5, 6. So you've got 6 candles there of where that consolidates from. So if it hit 324 and I was in this trade, I would probably take the majority of my profit around here, and then maybe I'll ride it back up to 380 of where this is. Right now, you can see that this gap here, this is a big candlestick. Again, you could have this as like a secondary target for you. 399. It's like 399 to 402, something like that. Yeah, 399. That's how I would map this one out. Now on the downside for this also has a longer way to fall to the downside than it has room to move to the upside. Now, if it breaks through the bottom of these candles here, this candle here, this candle, where these consolidate, this is where it could also really fall too, right? This really becomes the confirmation of where this goes to the downside, is right around 306. This is how I would hedge this trade. So the 306, if this goes to the downside, this could end up probably falling all the way back down here to within the 240s, 250 range. That would be the two targets to the downside for me of how I would map that out, right? And looking at the options chain, calls and puts, the 313, the $2.50 call has obviously the most, but the $3. So this is exactly what I'm talking about here for having 3 to 4 times the volume, right? This has 5,800 in volume and 757 in open interest. So that's more than 3 to 4 times for that. So if I'm getting into the trade, this would be the contract that I'm looking at because it has the most volatility, it has the most activity, and looking at it, you see that it's a pretty high risk, a high reward, low risk trade, right? You're basically earning $62 for every dollar move in share price for each contract, and you're only losing $3 on your contract for every day that you hold it, basically, right? So this is a pretty high reward, low risk trade to get into these $3 contracts for April 6th. Now stretching this out, let me see. I guess a $2. I want to see lower on the puts than $2. So did the 1.5? Oh, it did the one, and it only did 1.5. All right, I'll just take this back to $2. I don't think the 1.5 is really gonna beat anything. I think the $2 is going to have more volume and open interest. Yeah. So in that scenario, even with the sentiment of where this is going, it looks like it's heavier on calls than it is puts. So yeah, even for the 21st. The 21st I would even look at, right? It's going to give you more time. And this is a pretty cheap trade. And again, it's pretty low risk also, right? You have it at 0.61 delta, your theta at 0.01. So you're only losing $1. And that's for the $3 contract on the 21st of April, right? And again, it's way more than 3 to 4 times the open interest with the volume at 9,800. So this, if I wanted to play it safe, give it more time, this is the contract I would actually choose. But if I wanted to play a little riskier, then I would probably come in further to the April 6th on one of these, either the 2.5 or the $3. Most likely the $3 is what I would trade on this one. What are your parameters when it comes to high profit, lower risk when it comes to the Greeks? I also think that it's pretty similar. Like I'm looking at it to the delta to at least be 5 to 6 times what the theta is. If it's possible, like, and looking at that, right? You can look at the April 6th calls for the $3, and you've got your delta at 62, you've got your theta at 0.03. A lot, and a lot of the deltas aren't necessarily this much of a spread. You see a lot of the deltas that are right around like 30 to 45. The ones that you can catch like this that do have such a significant difference are generally good trades to get into. I'm looking for that. It's all relative, right? The gaps. Like I'm looking for all of those things all across the board within the deltas, the thetas, that gap there, right? And then the gap in the price of the share price and the target of where that could go. I'm looking at the only gap I don't like is when it's the bid ask spread for buying the options, right? That's the spread that I don't want to be significant. I want that to actually be smaller. But for the most part, is that the bigger that spread for the delta and the theta, the more profitable it's going to be, the lower the risk it's going to be. But you just want that language there to coincide with what the volume and the open interest is saying too. If you have a low risk, high reward trade, does it match a significant amount of volume? Does it have that in the trade? If it doesn't have the significant amount of volume, then it being sort of a high reward trade doesn't really matter, because volume is what's going to move those contracts anyways. All right, CVS. We looked at that. Hold on, I got to scroll back up because I already forgot the other tickers that you guys told me to look at. All right, Uber, Netflix, Roblox. All right, so let's look at Roblox real quick. Anyhow, so for BBAI, that's how I would sort of analyze that of what that's going to do. Now, okay, so let me delete my drawings for these. So you can already see right off of the bat for Roblox, you can see how long this has just been consolidating for. Now, the thing is when you like just right off of the bat, so when you look at your charts, you have to be able to notice trends just instantaneously, right? And so for this, you can see, if you understand the money flow and what Uncle Gerald teaches, right, about the 4 stages, you just see of where this has been consolidating for a really long time, like legit for a long time. I mean, it's really been consolidating since last summer, right? So you can draw this out for yourself. Let me see here. I'm going to do it. Yeah. So if you draw this out of where this sentiment started to shift was right in here, and then it breaks to the downside, sort of comes here. But really, it's honestly been consolidating since back here in August of last year, right? And you're basically taking this down to the bottom of where this sort of meets again, right? So it's essentially here, all the way across the board. So until, oh, shoot, it didn't lock it. All right. So until it breaks out of this box, yes, it broke to the downside here, right? But essentially, like this is like the consistent level of where Roblox has been hanging out since June of last year, right? And now it's just now breaking out of this box right now. So what happens when it breaks out of the box? Well, it breaks out, right? So there's a chance that Roblox is probably going to return back here in the 50s because it's been consolidating for so long. You know, anytime that I'm looking at consolidation, I think of it, I learn metaphorically, and that's how I attribute everything. That's what I associate things with images, with photos, all those things. So anytime that I see these boxes being formed like this, I think of it like fuel just being loaded into the gas tank, right? And then when it takes off, it's gonna take off. So I would keep Roblox on your watch list because you see that earnings is getting close, right? Earnings is going to be around the second week of May 9th. So chances are, and you look at Roblox previous earnings run ups, right? The last one was a run up. The one before that was to the downside. The one before that one, it sort of stayed the same, went to the downside, and then it went up to where its previous highs were, right? 2 days after. And you can see with Roblox, the trend here is that usually a day or 2 days after Roblox earnings, that's when the sentiment shifts, right? You see on the last earnings that it did what it did, but then 2 days later, on the second day, where did it go? Went to the downside, right? The earnings contract here, right, sort of stayed within this range, but then on the second day, what happened? Starts to go to the upside. Before that, what happened? Comes to the downside, comes all the way down here, pushes up, and then what happens? Goes to the upside. What day was it? Second day. So that's 4 consecutive times that Roblox has shifted its sentiment on the second day after earnings. So to me, moving forward for this earnings on May 9th, I'm looking at really what's going to happen on that second day. Same thing with this one. Back in May, right? First day, second day, boom, goes to the upside. Same thing every single time. So when you're looking at your charts, you have to be able to spot these trends. I'm always talking about like your job is to be a detective. Your job is to uncover the clues that make sense, and then you got to connect the dots. These are the dots you got to connect, right? This is the earnings trade. What happens here? Boom, third day, it goes to the downside. Same thing. It's all consistent. It's been consistent every single time since February of last year. So chances are it's probably going to do something similar. Whatever that is, whatever that sentiment is, I don't really know. But the fact that this is breaking out of this consolidation box after, literally almost a year of consolidation, it's probably going to hit the 50s. That would be my guess. I may be wrong, but that's just my guess. Now, looking at Roblox, if you look at the options chain, if you want to trade options on it, right? So looking at Roblox, this is at 46. So looking higher, say in the 47 to 40. So we actually got to go a little bit higher, push this up to, I'm going to say here to 50. So looking at April 6th gives you a little bit of time. You see the 47s at the highest. You see the 49. 50 might be where it's at too. So a thing about getting these trades at around like 10, 11 cents, 13 cents. Look, if you can get these trades under 10 cents, under $10, right? Even if it moves a couple of cents, it's a solid banger trade, right? If you can take that to 10 to 15 where you can sell within that 5-cent increment, it's really great if you can catch them at these levels, right? Because when these trades run, when you get them so cheap, they really do run. And as you can see too, it's still also a pretty high risk, a low risk, high reward trade, right? You're at 0.62 for delta, your theta is at 0.07. So again, you have for Roblox, you basically have a $5.50 move of where this could potentially go up close to its earnings time. Now, if you're looking at April 6th, it's not a whole lot of time for that to take place. But if you wanted to take it on a short-term scale, right, where you're really going to map out your levels is basically right in here. So if I'm mapping out that target on, say, if I get into the April 6th contracts, I'm looking for like just that box of where it consolidates, where it shifts, right? And it's really kind of around here at $48. So like 49.04 is essentially the target for me if I got into this trade, say tomorrow, right? The short-term target for me, if I got into the April 6th contracts, would be 49.04. That would be my profit target for this. But if I'm stretching it out and I'm looking at, say, the April 21st or even the May contracts, did I go out to May on this? Yeah, I went all the way out to June. So if I'm looking at May 9th, so let's just see here what's happening. Nobody's really buying May contracts, right? Everyone's kind of buying everything in the April timeframe. So I think the furthest I would go with this right now, just based on what people are buying and where the activity is probably April 21st. If I did say the $50 calls, since those are the cheapest at $115, right? And you see that the volume and the open interest is pretty significant on these. But those would be my short-term targets. And then you can use the options profit calculator to see, what your risk to reward is with keeping those contracts. But that's how I would trade Roblox. Looking at it, I think that the market overall is starting to shift back to being a bullish market, and things are going to start running again soon. But it's, it still has that inconsistency in there of just being choppy. But I think overall the sentiment is really starting to shift again to the upside. So, but you can make money either way. If you're in calls, you believe in the calls more, then it doesn't hurt to at least hedge those calls with a put trade and make money on the way back down when your contracts are getting smashed, right? But that's how I would trade. That's how I would trade Roblox. All right, I'm going to look at Hasbro here in a second. Hasbro and then Z. Actually, I'm going to look at Z first. So with Zillow, and again, same thing too, right? Zillow got smashed. You look at this time last year, right? Or I guess it was really October where it got smashed and down to the 20s. And now it's already double where it was since last October, right? When everybody didn't really believe in it. But here we are, right? The market always recovers. So for Zillow, again, kind of the similar thing as with Roblox is that this has really been consolidating too, right? Since right here, since this little run up here, it's really been consolidating since January, right? Then it falls back down to the bottom over here, right? Which is basically where this sentiment right here shifted is the same level of where this went to the downside and stayed there, right? And it hasn't really broken out of that until basically right now of where it's at. So Zillow is the same as with Roblox, is that it's starting to break outside of this box too. So straightening that up, and it's starting to come out of this box. The thing that I like about this Zillow chart is that it's got these huge candles and these gaps to fill, right? So it essentially could take this gap to 47.50-ish, right? On a longer term. It doesn't look like anything sort of coming up, no real news. But if you wanted to take this on a smaller short-term scale trade, you could essentially take it to this target right here where it sort of stops at the top of this, top of this, top of this, bottom of this, right? So this could end up going from right here to 46.07. That could be your first target is 46.07. 47.50 becomes where you sort of let your runners go to, whatever else. And then in terms of entering the trade, once it breaks through this one, this candle here, once it breaks this candle on the 13th of February, that's, I think, where the sentiment shifts, right? Because where the top of this is on the 13th of February is also where this candle starts. And this is a gap to fill, right? And where that candle starts, so does this one. And this becomes a gap to fill, right? So your early entry, I guess you will, would end up being 44.99 for Z. If you do calls to the upside, right? So almost to that point of where that sentiment will shift. And look, it almost broke through it already. You can see where it pushed down already, almost there. So that tells you of if it taps that level again tomorrow or this week, chances are it's going to break out of that. Usually the third time it tests that level is when the sentiment becomes confirmed, whatever it is, whether it, on that third time, what happens? Does it break above it? If it breaks above it, then chances are it's going to continue running. If it goes to the downside, then chances are it's going to continue to the downside. So it's usually that third time that you're looking for of where how it tests those support and resistance levels. So that's how I would trade Z. Now looking at the options chain, right? So looking at the options chain, you can see for the April 6th, it's not a, and again, this isn't real-time data because I don't have the subscription to it, but I think this is from like, maybe this is open just from Friday. I don't really know of when this data was. It's probably different if I pulled it up on Robinhood or something, but there's not a huge difference in the volume and open interest for these calls, right? But if I'm looking at Zillow, I'm looking at April 14th, the $45 call is where the activity is. You've got the $46 call. Yeah, and then you have the $45 call on April 21st. I would probably trade this one based on the $46 call on April 14th. This is what I would probably end up trading if I were to enter this. And again, delta's at 0.36, your theta's at 0.05. So it's a pretty significant gap in there. It's a profitable trade. Pretty low risk. You're only losing $5 on your contract for every day that you hold it. So it's not a whole lot of money that you're losing to be in this trade. Your risk to reward is pretty high on this one, I think. That's how I would trade that. And if you wanted to hedge that to the downside, right, the same thing is when it breaks these candlestick levels, the thing with this is that it has really big candlesticks every single time to the downside. So when this falls, if you're trading this, I would keep your stop losses pretty tight so you don't end up losing a lot of money, because based on the volatility of Zillow, those contracts get smashed pretty quickly, at least from my own experience of watching it. So the stop loss, I think, if hypothetically, let's just say that Zillow goes to 44.99 tomorrow, you enter the trade, the stop loss of where I would probably get out of this trade is probably here, where this candle is, of where this starts, because it's the base. It's the base really kind of the 20-day, and where these bigger candles are going to start to fill, right? Once it breaks this level here at 44.12, everything is going to move back down to the downside, I think. So that's like a suggested stop loss area that I would put that I would probably end up getting out of the trade. But the thing is if you set your stop loss there at 44.12, now that's a difference of like 60 cents, right? So that 60-cent move to the downside could also mean your contracts already go down 35 or 40%. So maybe you give yourself a cushion and raise it a little bit higher, right? It just all depends. But if it breaks those candles at that 44.12, it's probably going to continue to the downside again, back down to 43.63. And then again, probably back down here to this candle here to 43.36. There's a possibility that that's the direction that ends up going. That's how I would end up trading that, though. All right. Moving on from Zillow, looking at Hasbro. Now, see, so from here, so Hasbro, obviously, it switched everything here at the 48, runs up a little bit, hits this 50. It's really only got like, what I noticed from this already is that it takes 3 days. It'll run up for 3 days, consolidate for 2 or 3 more, and generally continue back up again. Now, with this being said, now I'm going to go back and look at what did it do on the last run-ups and consolidation, right? You see that it consolidates here in this little box, runs up a couple of days, consolidates again for another 4 days, runs up 3 days, consolidates again for another 3, right? And now we're right back to where it started. Now looking at these previous run-ups, you see that it runs up for 3 days, consolidates for 2 days, runs up for 5 days, consolidates for 3 days. Then it goes up again, consolidates again for 4, goes to the downside, right? That's another scenario of piecing that together in timelines, right? Same thing here. Runs up for 2 days, consolidates again, runs up for 2 days, consolidates again for another 4. Same thing. And then this, it's almost identical, right? You can look at it right here, is that this little time frame of where this goes and then consolidates is almost the same as right here. Then this goes up, consolidates almost the exact same time frame, runs up to the almost exact same level. Then what happens? Consolidates again. The only difference is that the next time it ran, it went to the downside, whereas this one goes to the upside, right? But it's generally running 2 to 3 days, consolidating for 3 to 4, going up for 2 days, consolidating again. And like that becomes the money flow cycle of Hasbro. So this is the personality profile that I talked about earlier, is understanding how these stocks move. And you can go and look at these little pockets of breakouts or breakdowns and see what's the trend, what are the consistencies in the chart, what are the things that make sense, And these are all patterns, right? It's just a cyclical pattern that continues to repeat itself. And this is how you anticipate how to get into your trades and how long to hold them and how to get out of them. And at the to the same regard, right? Now it's not as apparent here where it's just consolidating a whole lot, but even here, right, of where this sentiment shifts to the downside, what happens? Runs 2 days, then what happens? Consolidates. Basically consolidates 3, 4, 5, 6, 7, consolidates 7 days, goes to the downside. So your job is to find those similarities with that, right? So for this, now your time frame continuity is saying that it's breaking to the downside. So for this, that's how I would treat it. I would put a heavier risk to puts than I would for calls on this because of the time frame continuity, and everything's kind of speaking the same language, right? And if I'm mapping this out in terms of targets, let me look at this options chain real quick. I'm probably, because Hasbro doesn't move very quickly, I'm going to give time on this trade. I'm generally not even going to play a weekly on this because it just moves so slow and it doesn't have a high ATR. Right, $1.59. Plus you see that it's already almost at the top of the MACD. It's almost here at this histogram where this crosses over. It doesn't really give you much time, or it doesn't give you really much room to move. Hold on, I'm going to shrink this so I can put this on the chart if I can. I don't think I can. Yeah, let me just move this. So here, if you trade it just based on the MACD, you see where it's at. It doesn't really give you a whole lot of room to move. It's basically at 54. You've got until, I mean, I can't really see, but it doesn't give you a whole lot of room to move for Hasbro. So my guess is that this is going to get pushed down to the downside again, which also coincides with the time frame continuity. So if I'm setting a target right off the bat, I've said this before, that the EMAs, the SMAs are all resistance and support zones. So just right away, I'm setting this at the 20-day, which is the orange line, which is the green line on my chart. And you can also see that where the base of this 20-day is also where this sentiment right here shifts from consolidating to going back to the upside. So the difference of those two candles is where I would end up putting that. So the 50.19 would end up being my target to the downside. And maybe that takes 3 or 4 days. My guess is that this would probably end up taking 2.5 days based on previous trends. It could fall faster than that, but based on this, like, it would probably end up taking at least 2 days. And where I enter that to the downside is probably here at at 52.42 to the downside. Right? I would play heavier on the puts for Hasbro, and then I would hedge that with calls. Because if it has calls, this also has a big gap to fill too, right? These two candles, and then right here, if I'm playing this to the upside, I'm looking at 54.36 to be my target to the upside on Hasbro. That's how I would trade that. So as you're building your weekly watch list, what you want to do is map out your targets, but then also look at the ATR of what's possible. When could it potentially hit these marks? And then that's also going to help you pinpoint how much time you want to have on your contracts. But I think in an inconsistent market, a 2 to 3 week time frame is more than enough time for trades to really hit. And then if you're trading shares, you just really have to have patience in an inconsistent market like now if you're swing trading the shares, no matter what it is that you're buying. And I think probably with the inconsistent market that we have right now is that I think the stronger play is just like what Chris is doing, that he's just buying more income with the dividend paying stocks, right? While you wait, that look, you don't need it. you don't need it to surpass a price target because you own the shares. So you're not getting paid for the share price, and the difference in that in terms of a profit margin, you're getting paid for what you own no matter what, right? Even if it's getting smashed all to hell, you're still getting paid for what you own. So that's why playing the dividend stocks are also a really good move too in a market like this. Peloton. Yeah. Hasbro, Rome Charlotte's possible breakout. Paul says, can you talk risk management and how to stay profitable, not letting winners turn to losers? Probably more important than finding the trades. Yeah, I think with your risk management, for the most part, it really is all it's all individual decisions for you to make for yourself. But I think it's looking at also like where are your price targets on your charts in conjunction with what's the risk to reward on your options trades if you're trading options, or even if you're trading shares, right? How much are you willing to really lose on your trades? It's rare for me when I'm trading stocks that I generally use a stop loss. When I say a stop loss in shares, it's really only for the community. It's for you guys, just for you guys to be able to manage your trade better. It's not doesn't necessarily mean that that's what I'm using as my own stop loss. It's rare that I ever sell my shares for a loss. I'll hold it for 10 years before I sell for a loss, unless the company's like gone to trash and there's it doesn't look like it's going to be a profitable move. Then I would sell in that scenario. Just for instance too, like we got into BTB really high, and then the stock split I believe happened. And anyhow, my average for BTB is around $2. I believe. If I don't remember, I have to look at it. That being said, all it's doing is consolidating, right? It's still in the same range. It's not really doing anything. But when the stocks take off after they consolidate for so long, they really take off. They really do. And so anytime that you see these things, I don't ever want you guys to sleep on these opportunities. Because they're heavily profitable. Every stock that you look at that's ran up a significant amount, go look at its time of when it consolidated before that, and you'll see that there's a trend with it, that when they consolidate, if they're consolidating more than 6 months, 5 months, like these are trades to put on your watch list always, no matter what they are, whatever sector they're in, just watch them. Because when they take off, they're going to take off, and it's not going to be in your time. It's it's hard to predict sometimes. But with BTB, is it a frustrating trade? Yeah, because it got in a little bit too high, and then what looked promising, and then they had issues with their management and with the company. So the raising, they wanted to raise more capital. So anytime a company wants to raise more capital, it's not because they're heavily in debt or they're a shitty company. It's also because they're maybe it's going into research and development. Maybe it's going into some other products. Maybe it's going into some other things. So you have to look at what those things are to be able to make that decision. But even after that, happened, it's just consolidated, right? So I think if you're in this trade, I'm not planning to do anything with it at the moment. Like, it's just other than to continue buying it, because it's just consolidating. It's not really having any other activity. But every stock has its moment to shine, and it comes in its own season. And whenever it does, it shines, right? So what that timeline is, I don't necessarily know, right? So this, from way back in January of early this year, it's been consolidating for 4.5 months. And if you look all the way back in time, you're looking here from basically January of 2022 to all the way in November of 2022. So at minimum, I think this is probably going to start doing something around that year mark, right? Because this was from January till November. And then in November is when it really had its run up, right? And now you can take that back even further and go look and see what it did even before this, well, where this was before, right? Where this run up was. How long did it consolidate for? You even see it here, right? July of 2021 consolidates, and then it runs in November, right? So basically for that, July, August, September, October, November, so almost 6.5 months was when that was, right? And here was right around 10 months, essentially. So you just have to have patience and to be able to look at those trends and patterns and connect the dots to them and see if they're still affiliated. Now, a lot of the things happen in the market to where news, they release products, they get partnerships, whatever else. All of those things are in between that time, but you have to be able to look at the chart and then connect the dots to certain events, products, conferences, some of the news that's circulating too, to be able to anticipate these moves around the time frame that you might, for BTB, for instance, I would say by probably the summer or fall, like August, September, maybe there's activity then. I would look ahead to start to see things that are happening within the company then that time, the conferences they're a part of, the trial datas, whatever it is, whatever stock you're looking at, start connecting the dots between events that are happening and the timelines. This is the way that I anticipate moves to happen too when I'm getting into my trades. And I'm not always right. But a lot of the times I am. BTB, Hasbro. All right, somebody wanted me to look at Tesla. All right, so I'm going to look at Tesla and then we'll wrap this up. Actually, I'll look at Tesla and then I want to look at FRC actually, because that's come up a bunch for me. All right, so for Tesla, for all of you guys who trade this and stress yourselves out, I don't trade Tesla. I have no interest in trading Tesla. I think that there's a lot of opportunities elsewhere that you can trade. But for all of you who do trade this, AMD, and you stress yourselves out, to each their own. I like to live a stress-free life, and I don't want to trade stressful things. So, but in trading this, it looks like, again, this ends up going to the downside. But even for Tesla too, like the same thing with the consolidation box is that you can see of where this consolidates here, really kind of where this starts to consolidate is actually, wait, take this off. Didn't mean to draw that there. Really kind of in here of where that starts, right? So here, taking this through to essentially this point here. And Tesla broke out of that box a little bit. I mean, you could essentially raise this a little bit to where this red candle is here. So it almost broke out of the box, right? Hits the top of the box and obviously gets pushed down to the downside. Now, so for this, what I'm looking at is that already if I'm looking at this to the downside, this target for me becomes 187.88. Why? Because the EMAs and the SMA are automatic support and resistance. So for me, I'm taking this here. This would be my first target at 187.36. And you can see of where this sits on this 20-day is where it also sits on all of these candles too. And obviously back here in time too. right? Where this all consolidates. So this becomes that level for me. I'm just going to take off this box. So if I'm looking at Tesla's chain, now the thing with playing Tesla or AMD, even SPY, right? You don't necessarily need to play further out. You can, but also too, like you can really run it up on the weeklies too if you understand how it moves. If you understand the profile of how it moves, I'm going to leverage some of the weekly contracts as opposed to the ones that have more time. Why? Because its ATR is so high, right? It can literally change in a split second with like SPY, Tesla, AMD, the ones that have ATRs of like over $8, $9. It can run $10, $12 in a day. Like those are super volatile trades. But at the same time, you have to know what you're doing if you're playing the weekly contracts because of the strength of the volatility is just going to smash your contracts. But if I'm trading this to the downside, I'm looking at 187.36 as the target to the downside. And look, this could happen tomorrow. It probably will, to be honest. I'm not a wizard, but I would say that there's a possibility that this could even get smashed to 187.36 tomorrow. It's totally possible because its ATR is at $10, right? It could go to 184 tomorrow if it wanted to, which is, if you look at 184, where's that at? 184 is right here, basically where these candles are. Right here. Right below the 20-day and the EMA 5. And then if it obviously breaks below that, then you have to look at the lower end of things, which is down here for the lower targets. But there's a possibility that this could go to 184 based on the sentiment of where it's at tomorrow. If Tesla opens lower than where it's at today at 194.77, if it opens lower than that, then chances are I think it hits the 187. That's just my assumption. So for Tesla, I'm looking at the puts more than I am the calls at the moment, just based on the sentiment. And if you're looking at the puts, if you've got that bread to play with, I'm looking at probably I would even say, the $200 put is crazy that it's at 22,000 in volume. I'm looking there. I'm looking at the $200 put, or even for probably the 195 for April 14th of where these are. That's how I would trade Tesla. And those are targets. Now you could take the intraday targets in between the 187 and hedge all of that with, setting the prelim targets here, say 193.85. Right. And it's basically the start of where this candle was to where this sits to where these sort of touch here. Those end up becoming other targets also. So that's how I would trade Tesla. Paul says, do you try to match the direction of SPY with all of your weeklies? Yes, you always want to make sure that the sentiment of SPY or, not every stock runs with SPY, but you want to make sure that the sentiment is congruent with each other for the most part if you're trading options. Not so much with trading shares. It's not exactly the same, but when you're dealing with something like options with all the volatility of all the contracts, then yes, you want to make sure that the sentiment is similar. All right. Anyhow, y'all, I don't want to take up all your time. I appreciate you guys tapping in with me. I know it's way over time, so I appreciate you guys sticking around. If I missed anything, if you have things that I didn't look at, feel free to tag me in the chats, and I'm happy to look at the charts. I'm happy to offer my insight, targets, trade ideas, whatever. You can hit me up in the Discord anytime. I appreciate all of you. That's it. It's another great week to make some money in the market. So let's go get it. If you got questions, just let me know. All right. Have a good night, y'all.